Are you curious about how a crypto exchange like Kraken becomes a global powerhouse? Thinking face, it's not just about trading Bitcoin and Ethereum. It's about a smart, strategic playbook that adapts to different markets. Today, we're taking a deep dive into Kraken's growth strategy, focusing on two incredibly important regions, Japan and the United Arab Emirates. Let's get into it. The UAE, regulation and local integration. First up, the United Arab Emirates. The UAE is a key player in the Middle East and North Africa, MENA, region, and its government is actively working to become a global hub for virtual assets. Kraken's strategy here is all about compliance and catering to the local market. They were the first global exchange to receive a full financial license to operate as a virtual asset exchange platform in the Abu Dhabi Global Market, ADGM. Why is this a big deal? It means Kraken can offer a fully regulated service, building crucial trust with both individual and institutional investors. The biggest move was allowing users to trade, withdraw, and deposit virtual assets directly in the local currency, the Emirati dirham, AED. Before this, users often had to convert their dirhams to US dollars or other foreign currencies, which added extra steps and fees. By integrating directly with the local financial system and offering AED trading pairs, Kraken is making crypto more accessible and appealing to a wider audience in the UAE. Japan, the return of a giant. Now, let's talk about Japan. Japan has a history with crypto. It was one of the first countries to embrace it, but it also has a very strict regulatory environment. Kraken actually exited the Japanese market back in 2018 to focus on other regions. But in 2020, they made a major comeback. Their strategy in Japan is a masterclass in regulatory adaptation and long-term commitment. Kraken established a Tokyo-based subsidiary, Payward Asia, and worked tirelessly to meet the stringent local regulations. This wasn't a quick fix, it was a deliberate, 2-year process to ensure they were fully compliant with the Payment Services Act. Their re-entry came with a focus on domestic Japanese yen, JPY, deposits and withdrawals, along with trading pairs for major cryptocurrencies. This focus on getting the regulatory framework right and providing seamless access to local fiat currency is what positions Kraken for success in a market known for its savvy and discerning investors. The bigger picture, a global strategy. These two examples, the UAE and Japan, show that Kraken's growth isn't a one-size-fits-all approach. It's a localized strategy that prioritizes regulatory compliance, institutional trust, and direct integration with local economies. They're not just expanding, they're embedding themselves in the financial fabric of each country they enter. By focusing on these key pillars, Kraken is building a foundation for sustainable growth in a highly competitive industry. They're showing that in the world of crypto, being a responsible and locally focused player is the key to becoming a global leader. With that said, thanks for watching and until next time.